All right, so November 14th, took a futures trade, and here's my trade recap. My daily bias was bullish. Hold on, every time I'm confused about how I want to angle this. Okay. My daily bias was bullish. Why was my daily bias bullish? Well, when I mark my Asian session here, London session here, pre-market in New York, in the Asian session, it does what it does. But in the London session, it took out Asian lows, kind of reversed, and then took it out again pretty significantly here, and had sort of a draw on liquidity in the pre-market. It took out Asian lows pretty significantly once, twice again, and then a third time here, making a London low. And then in the pre-market, I created a new low, took out these high time frame draws on liquidity, and in comparison, this is the NAS. So in comparison to the SPY, this made almost like relatively equal lows between 7:40 this morning and 8:15, where SPY made a lower low, so that gave me a SMT bullish confirmation. In the pre-market, I also had again this liquidity move, which, because I had that liquidity, I looked again for SMT, and that's when I saw this SMT, so I marked it. I'd also marked SMT here too, but because this price action took it out, this kind of became invalidated, and so I sort of waited. So pre-market, and then again, because this was equal lows here, this made my NAS my preferred index to trade on, and so the market made a fair value gap here. In the pre-market, I was tempted to enter because it made a fair value gap that was respected, but I knew that market was going to open up at 9:30, so I'm trying to remind myself to be patient, and because had I gotten in earlier, I would have been stopped out here before the market even really took off. So now market's open at 9:30. I'm focused on NASDAQ. My bias is bullish. And so now I'm looking for a fair value gap and equilibrium to be respected. So a fair value gap is made here, but it's not officially respected. And I tend to drop down into like lower time frames too to see, hey, if I don't see a fair value gap on the 5, will I see it on the 3, 2, or 1? And I still didn't see it down here. I kept waiting, and of course my impatience, but I trying to discipline myself because I'm like, hey, something's got to go because we're getting all these green candles, moving upward. Like, let's just go ahead and enter in somewhere. But I stuck to my bias of being patient, and it paid out here. So actually, I think I entered here. So this is a fair value gap. This is a fair value gap between this candle and this. It was respected and closed out green, so I entered on here. I put my stops. I technically put my stops here. Oh, hold on. Technically put my stop here, which is kind of too much. My mental stop, but realistically, obviously with this, I wanted a, what it looks like I got a 1 to 2.1 risk to reward. I'm not great at looking at the market continuously. It's kind of stressful to keep looking at like each individual candle forming up and down for every minute or 2 minutes. It's kind of stressed out about it. Obviously, we have this, retracement here, but my stop loss was well underneath that. So I would literally flip between screens and like do something else so I wouldn't have to watch the candle form. So yeah, take profit eventually got hit. I did not wait for take profit to get hit. I think I actually got out somewhere here or something. And then I was like, oh, maybe I should keep going and whatever. But I just knew it's better to just take that one trade, put your whole into it, like your whole focus into it, get out. Because then, of course, it would have been just like FOMO trying to get back in and all of that. So I did a trade locker. I don't know how to show proper P&L, but this was 300 before. Now it's 679, and then this was nothing, I guess, and now it's 650. And this is across four, so it's about 2400 or so for today. Um, what could I have done differently? I would have waited until I hit TP. Um, Honestly, the market's like the candles are so short. The volume is not that great at this point to me. And so my impatience was like, I really need to sleep. I worked again last night, 12-hour shift. So I wasn't really interested in staying staying any longer into this trade than I wanted to. So I honestly think I even got out somewhere here, to be quite honest with you. I don't even think yeah, because I remember seeing these two big green candles. I think I got out somewhere over here because the volume is just so tiny. So the longer you stay in a trade, because your volume doesn't move as much, the volatility is not there. And this is NASDAQ, for goodness sake. And this was traded in the macros, right? Because I got in at 952, got out, what is this, 1040 or so. So like, I mean, there was some volume here, but overall, good trade. I was calm the whole time. I didn't freak out. I stuck to my bias of being bullish, was very confident about that. And naturally, when the market kind of does this thing where it psychs you out, it's obviously liquidity. Part of my brain goes, "Oop, I missed it. I should have been bearish. Like, let me focus on that. But no, the market's always gonna show, 9 times out of 10, it's gonna show your bias. It's just that your bias may not be the full trend for the day. It may end up being the retracement. As long as you know it's likely to be the retracement, and you look at market structure, price action to figure. When I look at market structure, price action to figure out what the market's giving me, because there are times when I am entering into a trade and I'm certain daily, weekly, monthly, whatever, everything is giving me bullish. But when I look at Asian session liquidity, I'm seeing bearish. So I'm like, okay, maybe the market move for the day, the full trend for the day for these, whatever hours is actually bullish. But I'm probably, because of my confluences and my confirmation, my direction is going to be, bearish. And that bearish might really just be a retracement. So it's important when to look at candles to see how they open and close. Like if I've got a really big green one, like here, like having this really large dark gray candle and then a really large green candle upward, the chances of you reversing back are slim. So if I was in a bearish trade and I got this candle, I'm out, because I can suspect that we are out of this retracement or whatever this move is, and we're about to go into the direction of that the trade wants to go in. Nothing's ever guaranteed in trading. It's all about high probability of where the market wants to go. I really do feel like I predicted pretty well where the market wanted to go using liquidity and high session time frames. So pretty cool with this trade. I actually really like this. I feel like I'm getting into the flow of things. Not only did this pre-market take out this high time draw somewhere, this high time frame draw is somewhere down there, but it also took out London low as well, which this is still London market, but to see it kind of still break out, keep wanting to go. And then again, so this is like 3 times, right? So I think ideally when people talk about smart money and all of that, like people would think, okay, we're going to go bearish. Like it's giving me a sign like, okay, when the market opens up, I'm going bearish. But sticking to the higher time and looking at the bigger picture and trying to understand what's going on with market structure. Yeah. And when I saw a break of, last statement, when I saw a break of structure here or change of character, whatever, large green candle, I was like, okay, we're definitely doing the bull move here. I mean, in the grand scheme of things, again, this market is probably likely bearish, government shutdown, rah, rah, rah. But I had an opportunity to be bullish. I took it. I had my confluences met. We're good. So, yeah. Now I'm going to have a good weekend.